All right, welcome Real Estate Hustlers podcast. I'm your host, Josh Appleman. Today we're joined with Marcia Socas, is a real estate broker, investor, and author who's renovated over 100 plus properties and closed 100 million plus in deals, using real estate to build lasting family wealth across generations. Marcia, we appreciate you coming on the show today. If you could let the listeners know a little bit more about yourself.
Hi, Josh. Thanks for having me here. I love real estate. I have been doing this for 25 years, as you mentioned, and I have enjoyed every step of it. I've enjoyed helping people buy and sell. I've enjoyed buying properties on my own. I've enjoyed fixing them myself. At first, I bought them, just as an investor and very passive and had to hire everyone to help me. And then I got tired of relying on people, so I started getting involved in doing some of the renovations myself. So I fell in love with that too. I loved being able to get up in the morning and see something start one way at the beginning of the day and end totally differently by the time I was done with that day. So it was very satisfying. And then selling those, negotiating those, and primarily kind of getting my kids involved and then having them step into the business with me and renovate with me and invest. And so I really have loved every part of it. Long-term rentals, short-term rentals, fix and flips, everything.
Yeah,
and I'm excited to talk about it all.
Well, yeah, and you just mentioned some other verticals in real estate too. So I know we primarily talk about multifamily, but short-term rentals is a tool you can use, asset class you can use to get yourself into other different areas of the world, or it helps pave the way to then pay for more properties too. So if you could, though, take us all the way back to the beginnings, how you first stumbled upon real estate. I say stumbled because typically people stumble across it. But tell us how you got involved, and then your first property that you purchased.
Yeah, you're 100% right about stumbling across it, because it was not my original goal. Was not real estate. I had a totally different career. I have a degree in neuroscience. I was working in hospitals, and I was young and was about to have my first son, and I decided to move back home to Orlando, and the position I had in hospitals didn't exist here at that time. And so my mom had been a real estate broker for many years, and she said, come work with me. I think you'll like real estate. We can have the baby in the office. It'll be a perfect setup. And I thought, okay, I'll do this for a little while, never knowing how much I was going to love it. And when my son was just a few months old, it was time to think about starting a college prepaid program for him. And I had the money together in order to purchase that. And my mom said to me one day, maybe you can think about this a little bit differently, because maybe with that money that you have for the prepaid college program, you can apply that instead as a down payment on a small house, and then use the rental income to pay the college prepaid on a monthly basis instead of the lump sum payment you were going to do. And I thought, well, I never thought of it that way. I just always thought, well, I have the money, I need to buy the prepaid plan. I never thought prior to that about using real estate as an asset to generate monthly income that could then go toward my goal. And so that's how it started. It was 22 years ago, I guess it was now. And back then the house was $88,000, which is a great price for a house, but it's 22
awesome.
years ago. So, it's a different scenario. I purchased it for $90,000 and asked the sellers to pay part of my closing costs. So they paid about $3,000 toward my closing costs, a little bit less than that. And then I used my commission in order to contribute to the down payment. I used the money that I had set aside, and with that, I was able to put a 10% down payment on the house and find a tenant right away. And I was making the grand total of $125 a month. And that's it. That was my whole cushion. And I just kept praying nothing was going to break and everything was going to be okay. And if I could just get through the first year, then everything would be fine. Because I had that $125 a month, but remember, $56 of that had to go to the prepaid college program in order to get that started. So I really had very little cushion there. But after a year, I was able to renew that lease and increase the rental rate because the market had gone up some. And then, meanwhile, of course, the mortgage stayed the same. And then the following year, it became even better. I could increase the rent a little bit more. And next thing I started building up some savings in there, made an extra payment toward the mortgage when I could, and ended up knocking off a couple of years off of the back end of the mortgage that way by just making some extra payments when that account accumulated. And that's one thing, by the way, that I think is very important that I did at that time. When you're starting out as an investor, at least for me, it was very important to keep that account separate from everything else.
Oh, yeah.
Because otherwise I would have just mixed everything together. I wouldn't have been as disciplined as I was with paying down extra toward the mortgage because I just would have seen it as extra money in my account. But because I had a separate bank account, it let me stay a little bit more disciplined. And, lo and behold, I'm now at the point where with that house, I think I have 5 payments left and it'll be totally paid off. And so not only did it pay
So
for
you're doing biweekly payments.
What's that?
And you were doing biweekly payments.
I wasn't. I
Okay.
was doing the monthly payments, but just every once in a while when I saw
Extra
that
payment?
I just would throw in an extra payment when I could.
Got it.
And so now that house, it paid for the whole prepaid college plan. And now it's kind of nice to think that when my son, gets married or has kids of his own or whatever, that's an asset that's there that's now, within 6 months going to be completely mortgage free. And it's now worth about $375,000, that house. And that's something that I can use to help him, as a gift when he gets married or has kids or, whatever, when he needs,
A launch pad.
something like
for the next thing.
Yes. Yeah. So that's how I got started. And it was really the advice of my mom that made me start seeing real estate in a different way. And then it's kind of one of those things where once you see it, you can't unsee it. You just start to look at everything in the way of like, okay, this, if I want something, if I want this car, instead of just thinking about making car payments, I'm thinking about, can I buy a rental property that will help me offset the cost of the monthly payments on the car? You just kind of start to look at things in a different way and look at how assets can help you get to what you want to achieve.
Yeah, but buy the business that then buys the thing, and
Yes.
it's that way you don't add liabilities onto your balance sheet. You're adding an asset that is now paying for the thing. And
Yes.
then you had mentioned separating the payment with the separate bank account. Bank balance accounting is huge. If you can separate your liabilities into different buckets, bring 1,000 in, and just distribute the cash in different accounts, it really keeps your budgeting on point too. Especially when you're dealing with multiple properties, it becomes like a necessity. You need to separate your accounting, your LLCs, your properties, and everything is then it's just self sufficient, pays for
Yes.
itself, and you know what you've got there.
Yeah.
So very cool. And then of course you're managing your own properties. You're managing the tenants, managing the things. We know in real estate, nothing goes perfect. You have your ebbs and flows. So name some challenges that you've faced over the years with real estate.
Well, you mean like with property management, with tenants and things like that?
Property management, property maintenance issues, just the things.
Yeah. I would say, with property management, I've been fortunate in that we've worked with tenants that have stayed very long term. And so we end up building really good relationships with them and really being very fair toward them. And they are, very fair back. We have nice relationships that way. Like I remember COVID was a while ago now, but when that happened, it was kind of one of those things where we felt it was important to pull together with everybody. And so we told all of our tenants from the start, like, this is such an uncertain time. If you want, don't worry about rent next month. We'll use your security deposit. We'll, because we all know this is like a transition. We don't know what's going on. And so kind of like they appreciated that. And then at the same time, they made sure to actually pay their, like, everybody paid their rent after that. They all, took the 1 month, and then they all paid their rent. And then when things were over, then we worried about getting back that 1 month security deposit. So those relationships have been very good. But your question was what's challenging. So I think where I have had a little bit of difficulty is when things go wrong that don't involve necessarily our tenants. So I do property management, for example, for a few condos. And I'm going through a situation now where the bathtub leaked from the second floor condo onto the first floor owner's unit. And he didn't advise us of it. He advised the association. They didn't tell us about it for a month. And so now we've kind of gotten into this situation where he's saying that there's mold there. And, it
Oof.
becomes such an ugly, uncomfortable thing, because it's like, he doesn't trust us. We don't know him. Nobody knows why the association didn't tell anyone. It just becomes really uncomfortable. And I would say that, a situation like that is certainly very challenging. But what, kind of steps in and helps resolve things and keep things even keel is insurance in that situation. The fact that there is insurance on the property, and there's liability coverage. And that really has been something that has been very helpful and is helping us all kind of work through the steps and make sure that we're, taking care of everyone the right way and that no one's getting taken advantage of. But I would say that's kind of the most contentious kind of situation that, that we have, is when it's a different tenant than ours
Yeah,
and
I think
something goes
one of
wrong.
the investors' unwritten rules, well, not probably more written than anything, is staying away from anything HOA related
Yeah.
because of bylaws, because of the. I mean, there's a lot of just different things that can happen, like what you just mentioned, that now makes it a pain for the investor,
Yeah.
and anything painful for the investor affects your cash flow one way or the other.
Yes.
So it's just putting those little rules in place that if it's got an HOA, maybe look on to the next one to invest in. But
Yeah.
you all are third partying that for a client,
Yes.
correct?
Yes. Yes. Yeah.
Got it. That's what about like maintenance issues? I mean, one we just came up or we just experienced, I want to say a couple months ago, was a sewer main collapsing. So we had to
Oh,
replace the entire sewer main, but there goes 55,000
yeah.
on the entire. But that's real estate. That is the
Yes.
you hear about all the good things, the cash flow, the this, that, and then people don't get to hear about the negative impacts. But you have to be prepared for those what if things on a
Yeah.
maintenance front. Insurance doesn't cover that. That is something you have to get taken care of. The property just sits there and you can't lease it up.
Yes.
Um, anything
I
major in your journey?
Yes, yes, we have had a major one, and it's just sad to talk about, because it was a situation. Insurance prices have gone so high over the past couple years, especially here in Florida, and they have just skyrocketed. And so we have some properties that, are owned free and clear, and we thought, well, we're going to kind of make this strategic decision to not get coverage on this property, because it's just solid block. It's made of concrete blocks. It just looks like what could happen to it?
Yeah.
Which, I mean, famous last words, I guess, when you think that way. That property caught fire.
Oh,
And yeah, and we did not have insurance on it. And so, it was a decision that we had made, and it was not the best one. And so it cost us a lot in terms of, time and money to get that taken care of, and to go through, dealing with the county to make sure that, we had all the paperwork and permits and everything we needed in order to rebuild it. The good thing is that we were able to do 90% of the stuff ourselves, so it wasn't a terrible expense. But it took time. It was just going through the permitting process took several months, and that of course eats away at your income. So that was our most major personal challenge, for sure.
but to be fair, though, it's almost uninsurable. It gets to a point where the properties can be almost uninsurable. The amount of cost that they especially in Florida.
Yes.
two back-to-back hurricanes that,
Yeah.
and I just there was an article out today. I think it was a major carrier that they were applying to do a 10% decrease in the insurance premiums. Like, why do you have to have an application to even do
Right.
a decrease? It made no sense to me, but
Yeah.
nonetheless, insurance certainly did skyrocket. And then I think
Yeah.
I think Florida, there's talk about property taxes even going away for primary residents. So that's
Yes.
interesting.
But what I want to read more about, and I really just haven't had time to sit and do it, because yes, everyone loves that. Okay, property taxes will go away. Yeah, for your primary. So what's
Yeah.
going to happen to us as investors? Are they going to go up? Is it going to, be an issue where now the people who invest in real estate carry all the burden of the exact same budget, or are they going to trim the budget so that we don't need, to have increases in ours? So I kind of need to read that part of things a little bit more, but you would assume that it's
One or
not
the
going to
other.
be great. Yeah, it's not
Got to
going to
come
be
from somewhere.
great. Yeah, exactly.
Yeah, I think Marco Island. There's increases talking on that. I like the southeast part, but it's like there's so many barriers to entry with costs going in. So it's
Yeah.
but getting back to real estate,
Mhm.
there's definitely always lessons learned. That's what creates wisdom. What are some other things that you can give to listeners on experiences, that way they don't need to take those missteps?
Oh, sure. Um, let's see. Let me think of mistakes that I've made that I would avoid making again. One thing is being afraid of deals. I think that I was more cautious before, and some things I should have jumped into a little more readily. I should have recognized that I did my homework. I analyzed the numbers. It looked good, and I shouldn't have been so afraid. And that happened. I had an experience with an apartment complex. It was like a 16-unit apartment complex, and the owner was willing to finance it.
Ooh,
So you don't see that often.
yeah.
And I met with him directly, and he said, I really think that, this is for you. And, because our office was going to list it. And oh, I hear
Oh,
sirens going
I'm
by over
downtown
there.
Cincinnati,
Yeah.
so there's always something.
Yeah. So I hesitated. I wasn't sure. I hemmed and I hawed, and I said, I just am not sure. We'll just list the property for you because I'm not sure that I'm ready to step into, kind of taking this on. And it was a mistake to not take. The numbers all worked. I knew the numbers all worked, but I just got nervous, and someone else bought it. And within 18 months, they sold it again for about $850,000 more. And I
Yeah.
just thought, oh my gosh, why didn't I? There really wasn't a reason for me not to do it other than just fear, because all the numbers worked. So
Well, you
I
don't
would,
know what you don't know, though, too.
yes, yeah, that's right. You don't. But I would say not to let fear hold you back.
Yeah.
And also, honestly, the one of the big things that I have learned is to we all want to know our real estate. We all want to know kind of like the formulas and, the shortcuts and the, calculating this and that. But the one thing that I think we don't focus on enough, and that ends up hurting us a little bit, or that we could benefit from if we know more about, is tax law. Because if you know how to, buy and sell and take advantage of 1031 exchange opportunities, or, just different tax laws and different tax consequences, you actually save a lot more money for yourself. So I'm trying to help my son with this now. He's now, like I said, he's graduated college now. He's graduated graduate school. He's bought his first home, and he bought a bank-owned foreclosure, and he's fixing it up. And the goal is he's living there with roommates. So that's, what they call
Nice.
house hacking, right?
Yeah.
So he's getting income to offset the mortgage. And then the kind of rule we've set into place, or that guideline that he has for himself, is that he's going to sell it right after 2 years. Because if you own a property for 2 years, then you have that capital gains exemption. So then he can make up to $250,000 tax free, and then roll that into the next property, which, at his age, he's 24, that's the right time to do that. do it again. And then, you will have hopefully made a good amount of cash on these properties in the span of 5 years that is tax free, which, which is a pretty amazing thing to be able to do at that age.
Yeah, and roll that up to the 30-plex, 40-plex, and keep
Yeah.
on. The house turns into an apartment complex, turns into multiple, and you have a nice sized portfolio.
Yeah.
And that's very cool. That is, and that's teaching the next generation the things that you've stumbled upon and that you've
Yes.
learned, and that you can make sure that the other generations pick up from there too. That's cool. And that's what our episode is the guide to generation. So what are some other things that listeners tuning in that will hear this podcast you've learned through the years that they're curious about the industry, they want to get in, they're not sure how? What are some things that you've learned and some avenues that you would guide them to go take?
I would say, obviously, get as educated as you can in terms of, your market, and learn how you can make money in any market, because you can make money when it's a buyer's market. Obviously, is a little bit easier, but you can make money in a seller's market too. And it just depends on how you approach situations. I think there was, when people were panicking in 2006 to 2008, the kind of like the bottom had fallen out of the real estate market, there were really great deals to be had. So just because everyone else is panicking at the moment, you should really kind of do the opposite at that time, because that's when we picked up probably some of the best deals that we've ever gotten.
On basis.
What's that?
On a basis perspective? As far as your basis, your buy price.
Yes. Oh, yes. We got amazing prices. And we purchased back then a single family home for $35,000 in our area, which is crazy.
Was that like off market, listed with a broker? How was
that
foreclosed?
Particular one was on the MLS.
Wow.
And
nice.
And there was another one that I got from an auction website, and purchased that one also for about $40,000. Now that one was completely stripped of electricity. All the electrical copper wires or whatever had been taken out. So there was some expense in getting that one going again. And then we purchased over in Tampa a fourplex. And that was through a bank that had actually contacted me. This was kind of interesting because I had put my name out there for all of the banks in case they needed a listing agent. And so this one bank contacted me and said, "Do you want to buy this?" And I said, "Well, don't you mean, do I want to list it? Because if I'm listing it, I don't think I'm allowed to buy it because it's a conflict of interest." And the lady said, no, I just have to get rid of this asset. So if you would like to buy it, we'll just sell it to you. I said, "Oh, okay. Yeah, I'm 100% up for that." And
wow.
So that, that was just a function of getting my name everywhere I could. As again, I thought my role was going to be different. I just wanted to list them. But, when the opportunity presents itself, make sure to not turn it down.
Yeah, and that's another piece is knowing what a good deal looks like too. I think back to your point, education will get you there, and just finding one thing leads to another, and then leads to another. Now you know what a cap rate means, and then even learning how to analyze property back of the napkin. Your top line rents, divide by 2, divide by your cap rate, and then if you want to take the full on spreadsheet from there. Just the little tricks of the trade so that you can turn and burn.
Absolutely.
What are some books that the listeners might want to pick up and read?
So, books that I like, non-real estate book. There's a book, I don't know if you've heard of it. It's older at this point. It was written by John Maxwell, and it's called The 21 Irrefutable Laws of Leadership. Do you know that book?
Oh, yeah.
Yeah. I love that book because I think that it's very important to be able to know how to communicate with other people and negotiate. And I think that book kind of puts some of that into perspective, how you can see what drives the other person, and then you can really communicate more effectively. And when we communicate more effectively, we can make a deal work for everybody involved. So I love that book because of what it kind of shows you that's outside of real estate. For real estate books, of course, everybody, loves Rich Dad, Poor Dad because it's an easy read, and it's, it kind of introduces the idea of, assets and what they are and the cash flow quadrant and all that kind of stuff.
Yeah.
I also wrote a book, which of course I would recommend, called Building Wealth. And it goes through kind of how I got started and how I helped my son to get started as well. And just kind of touches on generationally how you can build wealth and what are the different steps you can take as a parent, as a grandparent, or as an investor, at different times and different stages with different types of property. And so that was fun to do, and I like sharing that information. But so
Very
yeah,
cool.
those are my favorites.
What are you using any kind of AI platforms or anything to help analyze deals or communicate with?
I do not use AI to analyze deals. I just don't think it could be nuanced enough. I don't, it's like Zillow does an okay job, but it doesn't really look at differences, in some particular aspects of properties that I think are very important when it comes to their valuation. So I've never thought that AI would be any better than that. I mean, maybe it is, and I just don't know yet.
Drop it in ChatGPT,
Yeah,
drop an OM in ChatGPT, and let it
yeah.
just
I
work.
might have to try that. Yeah,
It's incredible stuff for sure.
yeah. I
Um,
I work in the same area that I grew up in. So for me, I just really know my area really well. And so that makes it easy for me to kind of know a little bit intuitively if an area is one that I want to invest in, and that I think is going to rent really well.
Oh, for sure. Yeah, and that's extremely important, knowing the streets, because
Yeah.
in real estate, streets do matter.
Yeah.
One street next to the other, so it's either you want the easy tenant, easy properties to lease up, or the ones that tenants want to stay away from, and they could be
Yeah.
literally a street away. So,
Yeah.
very cool. If a listener wants to reach out to you, get a hold of you, get some advice from you, possibly, how can they reach out?
Yeah, I have a website, and it's just my name, Marcia, spelled Marcia, and then Socas, spelled SOCAS.com. So that's probably the best way, because that will have access to my email, my phone number, all my information. So it's easy to get in touch with me that way.
Awesome, Marcia. Definitely appreciate your time and look forward to following you. Thanks again for your time today.
Thank you. This was a lot of fun. Thanks so
Yes,
much.